If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's May 13th, 2020, and today is Tuesday morning. So looking at the highlights of the day, the Dow Jones drags down the tech stocks lower in a major sell-off yesterday. But first, let's take a look at the daily economic event. So we're going to be starting out with the United States at 3 p.m. South African time. Fed Chairman Powell will be speaking. Now, the market sold off yesterday after the monthly CPI number came out. And as you remember yesterday, if you look at the daily review, we spoke about the deflationary issues that can happen from the fact that price of oil is deflated so much. Now, looking at the markets, we're going to start out with the currencies. We're watching the British pound actually waver down to support. Is it challenging it? Perhaps. I'm going to look for some signs there. Now, looking at the Dow Jones, over 600 points in a sell-off, including aftermarkets trading. So it's been a very, very extreme sell-off, with just one day of trading. Now, looking at the commodities, gold is pretty much unchanged, while oil creeps up above $25 in anticipation that the easing of the lockdown is going to increase the demand for oil. And lastly, looking at the stocks, it was systemic. It wasn't just the Dow Jones stocks, it was even the tech stocks that sold off. But let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at a 4-hour chart of the GBP USD, and you could see that we're at that bottom, that range, challenging that 122.50-ish level. We're about 30 pips away from it, just bouncing off of it. So something to consider as this continues to trade later today. If we do break this 122.50-ish level, we could see it having a correction down to the 120-ish level. Okay, now things are pretty much not normal still, okay, in everything, okay, in the easing of the restrictions, the possible of a second wave of the coronavirus happening. So something to consider going into today's session. Now, jumping into the commodities, we're watching oil actually get above this $25 a barrel. Okay, we actually rallied all the way to $26 a barrel yesterday. So something to consider, as it is looking like it's strengthening here. It's still in a trading range, but it is looking like it's strengthening here, making higher lows, consolidating on a higher platform. So that's something to consider if this does push above the $26.50. Right now, we're not there. We're still retracing about $1 below that. So something to consider. Okay, I'm not saying that this is clearly a bull move. It has to still prove to us that it's creeping higher on a consistent basis in order for us to make that assertion that it's actually going to go up higher. Now, looking at the Dow Jones, this is the major sell-off we had yesterday. Okay, look at that nosedive. I mean, from Monday to yesterday, we actually sold off from 24,400-ish level, which was really actually right here, down to 23,300-ish level, 376. So within this area, we've made over 1,000-point retracement. Now, it's not exact because, after hours and pre-hours trading, this has made a couple of changes, okay? But you could see how quickly the extremity of these sell-offs are. Okay, so with that said, we're bouncing off of this 23,376. We're trading it right now at 23,651. Now, all considering, 24,000 would be my resistance-ish area. Okay, that's where I would look for if this does rally later today. Now, with Fed Chairman Powell speaking later today, I'm sure he's going to try and add some confidence in the markets that they're going to be on top of this deflationary issues, and that may rally the market higher. Okay, so just be aware of that. Okay, in these type of environments where we are in a bearish kind of environment, you'll have extreme moves to the upside also. Okay, and the reason you have extreme moves to the upside is because what happens is that there are short coverings and it's a short squeeze. So be aware of that. Okay, now it doesn't mean that it's going to sustain itself, after it makes one of these quote unquote rallies, but it does, squeeze everybody out. Okay, so if you're in a short position, you want to just be very careful about the way you're picking your spots. Okay, especially since, we're trading so far in a range. Okay, unless we break 23,000, we're going to be trading between at least 24,000 to 23,300-ish level for now. Okay, as this is developing its new trading range. Okay, this is your upper limit. on this side. On the upper side, it's 24,000. On the lower side, as you can see, we're developing this 23,400-ish level as a support. So something to consider as this continues. Now, looking at the stocks, there was nothing to hold me back yesterday to say, okay, this is not going to go up higher. Even the NASDAQ sold off, okay? This could be people taking some money off the table, okay? I mean, if you were an investor, okay, and you've held Apple and Amazon and Microsoft for a long time, this would be probably a good time for you to take money off the table, especially as we go into the summer months. You know, most fund managers want to, you know, book their profits, you know, at these type of intervals, all right? When we're trading here only about, you know, $20 off of our highs for Apple, but this may further correct itself, okay? So be aware of that. Amazon also taking a little bit of a slide. Microsoft taking a decent slide of $5 down. Facebook as well. Everything was down yesterday, okay? So, but, you know, the clear-cut ones are the JP Morgans, okay, which traded down to $87 from our $89.50 from earlier in the week. So just be aware of it, that we are in a kind of like a brinks of a correctional move. Okay, I don't want to say we're in a correctional move, but we're in the brinks of a correctional move. Now, it's not going to give it to you so right away. Okay, if the markets are going to go down, it's not going to tell you I'm going to go down now. Okay, it's going to give you a couple of fake outs as well. So just be aware of that, because, you know, we are in an environment that a lot is going to be tested in the next 30 days, like I've mentioned before. This is Fred Razak. I want to wish you guys a great trading day. Thank you.